Hello and good afternoon, good evening, everyone, and welcome to day 3 of this conference, the Global Macroeconomic Conversation that we have hosted with UBS. 2 days ago, we looked at the state of emerging market. Yesterday, we have a very interesting conversation about the advanced countries in terms of monetary policy. And today, we're going to look at a topic that is very relevant for us, Reinventing Bretton Woods Committee, central bank digital currencies, and of course, the future of money. At a recent survey done by the BIS suggested that almost 60% of central banks are considering CBDC and 14% are carrying out pilot tests. This is the context of our conversation. It's really to try to understand where do we stand. We have an eclectic and a super group of speakers this afternoon, and I would like to thank all of them for accepting our invitations. The session will be chaired by Massimiliano Castelli, Managing Director at UBS Asset Management. And I take this opportunity again to thank UBS as a whole for making this event possible. And Max, I give you the floor. Over to you. Thank you.
Thank you very much, Mark, and good morning or good afternoon to all our guests from all around the world. It is a pleasure for me to host another panel of this series that we have been hosting for the last 3 days. I also chaired the panel the first day on emerging market. But I'm also very glad indeed to chair this panel on digital currency because it's definitely a topic which is of great interest, not only for us as a leading bank in digitization, but as well in terms of the question and the interest that we receive from our clients. In particular, in my role, I am the head of strategy and advice for sovereign institutions, which include central banks, sovereign wealth funds, and state-controlled investment vehicles. And over the last year, we received quite a lot of inquiries about digital currency in general. Of course, there is a lot of interest about so-called, for instance, cryptocurrency. But most importantly, what are CBDC, central banks, digital currency? And most of the time, the question is, where do we stand in terms of this new type of currency? And what are the implications of the CBDC for the global financial sector, for the global financial architecture, and I would say also for, of course, the investment side. In terms of the topic, let me first, before introducing our panelists, to say a few words. So, as Mark mentioned, the BIS has been particularly active on this topic, and he mentioned a survey that was carried out. We are also actually monitoring this topic very closely. We counted more than or around 50 pilot projects being run by central banks globally on CBDC. So I think there is definitely the jury is still out about which pilot projects will ultimately turn out to be successful. And I think there are also a lot of questions out there which I believe will be answered as we move into the execution of these projects, of these pilot projects in the next few years. In particular, for instance, when it comes to distribution models, are we going to have a wholesale only focused type of digital central banks and digital currency, or it will also include retail? Will be more an account-based or will token-based? And most importantly, also from a bank perspective, what is the risk of the disintermediation of the commercial banks? I think definitely the feeling is that we are in the middle of an important revolution of the financial sector. And of course, this is something that, this is the topic of today. Let me just mention once again as well the fact that this is not only an activity which engages central banks. Also, commercial banks are very active in this space. For example, UBS participates in the Finally network, where basically we explore how blockchain and distributed ledger technology could use tokenized cash asset to settle security trades, an initiative that became known as the Utility Settlement Coin Project. I mean, this is something very important. We are allocating a lot of resources to this topic. As an investment house, we are also looking at how blockchain and distributed ledger technology can be broadened to include other asset classes, for instance, in the case of real estate, gold, and other projects. So the topic of today, however, it is central banks and digital currency, and I'm very glad to have a very distinguished list of panelists. First of all, we are going to hear from Serey Chea, who is Assistant Governor at the National Bank of Cambodia. Then we have Binur Zhalenov, who is advisor to the governor, CEO of PayTech and FinTech Development Center at the National Bank of Kazakhstan. Dr. Yao Quang, Director General of the Technology Supervision Bureau of China Securities Regulatory Commission, or in brief, CSRC. And last but not least, my friend and the previous colleague, Ousmène Mandeng, advisor at Accenture on central banks' digital currency, and actually involved with a lot of central banks around the world in advising and in the management of the pilot project that I mentioned to you earlier on. So without further ado, I would like to kick off. But before, let me mention that, of course, we already received some questions from the participants. But I would also like to encourage you to also ask a question by sending an email to me. I will receive it in my inbox, and I will turn it to our panelists. You can see the email address at the bottom of your screen. So without further ado, I would like to pass the floor to Serey Chea, Assistant Governor from the National Bank of Cambodia. Serey, please go ahead. The floor is yours.
Thank you, Max, for the introductions, and thank you, Mark. Good morning, good evening to every one of you, the panelists and the audience. It's really an honor to be here and share with you some of the work that has been done in Cambodia in terms of backbone payment system. I know the introduction is about, and the topic of this event is central bank digital currency. But this is one of the misconceptions about the project that we are currently leading. It's more of a backbone payment system rather than a central bank digital currency. And we also realize that there's nothing wrong with the current form of money that we are using in terms of, if you look at the definition of money, which is a unit of account, a mean of saving, and mean of payment. The first two is doing quite well. The only thing that is not doing well is the mean of payment. And that's the reason why, everyone is trying to move into the electronic form. In terms of the Bakong project, that we are currently working, I think one of the main interests on this particular project is the fact that it's using distributed ledger technology. And I think if we were to use any other technology, nobody would have pay attention to our project. But we were sort of the first to do that. And the beauty about distributed ledger is the finality of the transaction. So what is Bakong in itself? It is a system that allows interoperability between the players in Cambodia, which currently we have quite a fragmented payment landscape. We have the banking sector, we have the microfinance sector, we also have the payment service provider who are operating independently on its own sort of ecosystem, and there's no sort of interconnection between the different players. So what Bakong allow is to bring everyone onto the same platform and allow people to transact across different institutions with each other. And basically, if you want to simplify it, is that in the past, if you were to use, and this is like a mobile service provider, if you use a mobile service provider from one service provider, you can't call to your family who is using a different service provider. So what Bakong allow people to do here is that if you're using a service provider, a wallet or a bank from one service provider, it doesn't prevent you from doing transaction with another customer using a different banks or different institutions. The uniqueness of this Bakong project is threefold. One is that it's a wallet mobile applications that is introduced by the central bank. And the way it operates is not very different than a private mobile application. This one is unique because it is provided by the central bank for the public to download and register. The second I already mentioned is the fact that it uses the distributed ledger technology. Indeed, the Bakong has some technology feature of a central bank digital currency, but in terms of the accounting and regulatory treatment, it is not. The third uniqueness of Bagong is that it's allow easy interoperability among the different players. I already mentioned it in the markets. And the most important thing is that it minimizes the liquidity risk that we would normally see on a normal payment transaction flow, because it's allow these peer-to-peers and therefore the finality of the payment. So if you look at the way you can connect different players together, you can either open a central bank account, a settlement account with the central bank, and then connect everyone together. And that settlement account will act as a sort of liquidity provider for the central bank. If you hold that settlement account, you have to provide liquidity to the different players to settle in case their liquidity is not enough. So it creates certain liquidity risk. But with the Bagong and the fact that it's using distributed ledger is that we are able to allow that centralized settlement and clearing. So customer will have to, they can only transact if they have money in their account, and the institutions that provide this interoperability don't have to worry whether they have enough liquidity to settle on a bulk basis. So this is really important if you have a fragmented system like Cambodia, where the banks are treated or regulated as banks, and then we've got the payment service provider who are regulated as a technology company, and the level of regulation is much, much less. So if you want to bring the technology company into the central bank settlement and clearing system, you have to require from them the same level of liquidity management that you would normally require by banks. And that's really beat the purpose of trying to reduce regulatory burden on this institution, and therefore allow a much cheaper services to the end users. How does it work really is that, as I mentioned earlier, it's pretty much like any other wallet. The banks who want to participate or who want to allow their user to participate in the Bagong process will have to exchange their fiat money with the central bank. And in exchange, the central bank will give them the electronic form of their money that they can then use and distribute it to their end user. So if I am a bank customer and I want to use Bagong, what I can do is I can go to a bank and I withdraw money. So the bank can have an option of either give me cash, the paper banknote, and I put it in my leather wallet, or the banks or I can request to have my balance credit into my Bagong wallet, which I can download. It's really available and easy to download for anyone and register. So that one way of doing it at the central bank level, and this is where the CBDC feature is not there, is that we don't hold individual accounts at the central bank. The banks are the one responsible to their respective users for that. So that's some of the feature of what we're doing, and where we are right now. Currently, we have connected through Bagong in one go 5 million users with a monthly transactions of turnover about 100 million US dollars and 150 billion local currency, real. And it's pretty small, but it's quite a good size for an economy like Cambodia, and considering that a lot of the population here don't have access to formal financial services yet. And so hopefully what we hope with Bagong is that it would allow people to be able to access financial services, formal financial services, more easily, because the application is free to download, easy to register. We amended our KYC in such a way that you can just download and take a photo of your ID and yourself. You can transact up to $500 equivalent. So basically anyone can do that. You need to have a local phone number, though. And so hopefully we can increase the number of people having to access to formal financial services, create certain form of payment, sort of credit profile, use the payment information to create a credit profile of the users and eventually allow them to access finances and other formal financial services. I'm going to end here and happy to take further questions down the road. Thank you.
Thank you. Thank you very much. Very interesting, actually. And just to be clear, this is still a pilot project. So this is still the pilot.
No, it's
or it is already an execution of the final setup and is going to be rolled out through time?
Oh, it's already rolled out. We have piloted it for about a year in 2019 and then going to 2020. And as of October, I don't remember, October, November last year, Q4 of last year, we officially launched it. So we are about 4 or 5 months in the formal launch.
Thank you. I'm sure there will be questions and we will come back on that. So I would like to pass it to our second guest, Binur Zhalenov. Please, Binur, I know that you have some slides and you can share your screen.
Yeah, thank you. Can you see my screen now?
Yes, we can.
That's great. One moment, please. So it's a great pleasure to be here today with such a great panel, and thank you all, IMF and UBS, for allowing us to have such an opportunity to talk about such a hot topic, which is CBDC. So today I'm going to cover 2 main topics, which is CBDC in Kazakhstan and key strategic considerations that we have during the implementation. So, well, according to a BIS research agenda of central banks was really dominated by CBDC last year. So as Mark already mentioned, the absolute majority of central banks are at the stage of active research, many of them doing pilot projects or proof of concepts, and the motivations for CBDC implementation differ across the world, which makes sense because every economy is different, and we were assessing why we could use CBDC with respect to local economy, and there are some of the potential benefits for our economy, which is financial inclusion, but honestly, we think that we would tackle this particular problem with other elements of national payment system. Also, payment efficiency is clearly important for us, and we see some of potential opportunities in CBDC and distributed ledger technology in particular. And well, when we talk about monetary policy and any macroeconomic consequences of CBDC implementation, it's quite dark area for everyone, I guess, all around the world, because those are questions that could not be answered without the actual, observations what would happen if CBDC would be implemented. So our belief that there are 4 main, factors that determine potential implication of CBDC implementation, which is CBDC ecosystem, meaning how many merchants would adopt this technology, how many people would use CBDC, how many players or innovators would use distributed ledger, CBDC platform for some kind of value-added transactions, and many other things. And obviously, regulatory framework and overall design would also, shape the CBDC implications. So in Kazakhstan, we initiated the research of potential implementation of CBDC last year, and we have 2 key standpoints on CBDC implementation. So obviously from tactical point of view, there might be some of the advantages in terms of increasing efficiency of payments, probably achieving wider financial inclusion, getting higher transparency of transactions when we use budget money. But more importantly, there is a strategic perspective, because we believe that financial industry are at the stage of ongoing huge transformation at the very core level. And we believe that in order to keep financial stability, we need to keep stable players, in the market. And our belief is that financial market players should learn how to deliver higher value than they used to deliver. because we have a lot of big tech entering the market. We have retail players that also, started to look for some of the financial services. And I believe that not only CBDC, but new elements of digital financial infrastructure would help them, to build a better product for final consumers and protect the industry from, over-convergence, I would say. So that's why we position CBDC not as a project in itself, but rather as a part of the bigger story of national payment system modernization. We have 4 parallel streams of work for CBDC research in Kazakhstan. So we hope to publish, by the end of this month, we hope to publish a public report on our view, what is CBDC, on our plans, on potential models of implementation. Then we would have a series of panel discussions with international experts on the topic and with participation of market players. We would finish proof of concept by the end of the year, and we hope to get a final report with a decision on scaling up by the end of this year as well. So 3 key tasks, strategic tasks for this year is we should tackle uncertainty that is growing around the topic, especially here in Kazakhstan. Obviously, we want to get some practical expertise in the topic, technical expertise, some methodological expertise, and test the feasibility. So in terms of doing these streams of work, we have 2 important strategic considerations. So first, we found out that people and market players speculate a lot about CBDC topic because our belief that the knowledge, there is a scarcity of knowledge as for now about CBDC, especially in Kazakhstan. So that's why people mess up different, means of money, and it's kind of hard to people to have a clear picture what is CBDC. So that's why we act as a part of our strategy. We consider massive media coverage on ongoing research, what we are doing. We want to do different formats for different strata of people so that everyone understands and get a clear definition what CBDC is, which kind of risks it have, and which kind of potential advantages it could have. It is important not only establish this media coverage, but also to build a dialogue between regulator and market players to get a better probably solution to overall payment system problems. And also, we believe that at the very core, CBDC, as any form of money or as any form of payment system, is essentially network-enabled digital platform. So that's why we believe that the critical factor of success is actually building those network effects around the topic if we would decide to implement CBDC. Because it has a potential to connect 4 different types of players on the market, which is payment systems. We should attract them, consumers, merchants, and innovators. So our aspiration is to build such a technological platform as well as regulatory environment that would help every incoming player to the CBDC network to increase the value exponentially, right? So that's why we consider all of these potential steps within the ongoing research and future proof of concept. So yeah, thank you, and I would be happy and glad to answer your questions.
Thank you. Thank you very much for your opening remarks. I found interesting the point about communication, because I believe the people on the street, probably they are more, they hear more about Bitcoin rather than central banks and digital currency for sure. So it will be interesting to see in the future how the two will coexist together. Actually, I have a question on that from one of the participants. So, but we can come back on that topic. Let me now move to Dr. Yao Qian, please. The floor is yours.
Thank you. Ladies and gentlemen, good morning, good afternoon, and good evening. It's an honor to attend the IMF Spring meeting. Today's topic is about central bank digital currency Taking this opportunity, I would like to share with you some of my thoughts on super sovereign global digital currency, SGDC, which I believe is a quite interesting matter. The points I expressed today are just my personal views, and I look forward to your comments on this. In my following speech, I will first analyze the defect of the current international monetary system, namely the Triffin dilemma. I will then go on to discuss some of the existing monetary options that have potential to become super sovereign reserve currency. And from there, I will propose an idea scheme for super sovereign reserve currency, SGDC. First, a review of the current monetary system may suggest that the Triffin dilemma is not fundamentally solved and may get worse. After World War II, the Bretton Woods system was established where the dollar was pegged to gold and other currencies were pegged to the dollar. This system bore an inherent contradiction, namely the Triffin dilemma. In 1971, the Bretton Woods system collapsed and the international reserve currency moved from single to multiple. It should be said that the Triffin dilemma is inevitable as long as the international reserve currency is a sovereign currency, since it still depends on the balance of payments deficit of the countries issuing the reserve currency. After the international financial crisis in 2008, the international community called for faster reform of the international monetary system. Unfortunately, no significant progress was made so far. The outbreak of COVID-19 pandemic is a new turning point in human history. The inherent instability of the international monetary system may get worse. Currently, the US dollar accounts for about 60% of global foreign exchange reserves. To combat the pandemic, the US fiscal deficit hit a record high, which is more than double of the deficit during the financial crisis in 2008. On balance of payment, the US trade deficit also reached a record high in 2020. The balance sheet of the Fed has been nearly doubled since February 2020. Policy shocks from issuers of international reserve currency may impose another challenge for the rest of the world, apart from the COVID-19 pandemic. Second, to reform the current international monetary system, we need a super sovereign monetary scheme. Some of the options may include the special drawing rights, SDR, Bitcoin, and global stable coins. About the SDR, in 2009, the then governor of People's Bank of China, Mr. Zhou Xiaochuan, proposed a reform plan to create an international reserve currency that is decoupled from sovereign countries and can maintain long-term currency stability. And he believed that the SDR carried certain features and the potential of a super sovereign reserve currency. This proposal was insightful and forward-looking. However, SDR is still subject to the constraints of global economic governance and the gaming of international politics, which dooms it to be an extremely complex and difficult process to transform SDR into super sovereign international currency. In particular, SDR is now still pegged to sovereign currencies. The SDR currency basket is composed of currencies of 5 IMF members. In addition, the SDR can't be used for transaction settlement, as it only acts as an accounting unit and a reserve asset, and therefore it doesn't have a complete set of monetary functions. Moreover, the supply of SDR is limited, making it unable to meet demands of world trade. These features constrain the SDR from becoming an international currency. About Bitcoin. Theoretically, SDR is not the only option for super sovereign reserve currency. For example, gold, silver, and other precious metal currencies that appeared in history also have a chance. However, returning to the former gold and silver standard system is not the ideal choice. If one looks broader, what really has the potential to become a super sovereign reserve currency might be digital currency, a currency not pegged to any sovereign currency. Bitcoin can be deemed as a prototype of a super sovereign currency. Issuance of Bitcoin is not based on national credit and naturally bears the merits of super sovereign currency. In particular, the algorithm-based issuance of Bitcoin and transaction-based bookkeeping are consistent with the plan for International Clearing Union, ICU, proposed by John Maynard Keynes, which could avoid aggregation of global imbalance. Keynes proposed the creation of Banker, an international unit of account, different from all national currencies. Trading members are each allocated a current account denominated in Banker. When country A exports goods to country B, the ICU will register two equivalent entries at the same time. Country A's account is credited and the country B's account is debited. Such a model is quite similar to the unspent transaction output UTXO of Bitcoin. The account unit of UTXO is Satoshi, and the eighth power of 10 of Satoshi equals 1 Bitcoin. This is similar with Banker. About global stablecoin, Bitcoin's payment and settlement performance is limited and its value is unstable, making it unable to become a real currency. In order to solve the large fluctuation in value of the Bitcoin, the global stablecoin came into being. A typical representative is the Facebook-led cryptid currency Libra, now renamed as Diem. The Libra adopts the modified BFT hot stuff. Compared with POW, BFT has the advantages of high efficiency and high throughput. Moreover, Libra also addresses the unstable value of Bitcoin by using legal tender as issuing reserve on a one-to-one basis. Libra's value is still pegged to sovereign currency. Therefore, just like the SDR, it is difficult for Libra to become a real super sovereign reserve currency. Third, suggestions for a super sovereign global digital currency. In theory, super sovereign international reserve currency should meet 5 criteria. First, no pegging to sovereign currency. Second, orderly issuance rule. Third, enabling flexible adjustment based on trading demand. Fourth, a complete set of monetary function. And fifth, stable value benchmark. Generally speaking, none of SDR, Bitcoin, or global stablecoin meets the above 5 idea features. I would like to put forward a new idea scheme, a super sovereign global digital currency, SGDC. The mission of SGDC is to build a universal, statutory, and super sovereign digital currency that can be widely used in unit of account, circulation, and reserve in international trade. Similar to Libra, SGDC can be initiated by the IMF with participation of countries around the world, and agreements are signed to ensure the global universality and legality of the SGDC. The so-called legality means that all the countries agree and adopt IMF provisions that stipulate the unlimited liquidity of SGDC in international trade and financial activities, and that no one shall refuse to accept SGDC. While the SGDC is initiated by the IMF, it is governed by an independent SGDC association of which any country can be a member. Members are equal and have the same voting right. The SGDC system is based on blockchain and may start from consortium blockchain. To ensure transaction performance, the SGDC, like Libra, adopts BFT mechanism of high efficiency and large throughput. Instead of packing to sovereign currency or using sovereign currency as a reserve for issuance, the SGDC is issued automatically based on established algorithms. For specific algorithm rules, one may consider the Fisher equation, MV equal PY, in which M refers to circulation of SGDC, P represents global commodity price index, Y means global trade volume, and V refers to velocity of SGDC circulation. As V remains constant, the growth of SGDC supply equals the growth of global trade price index plus the growth of global trade volume. Based on established issuance algorithm, a stable value benchmark is established for SGDC, which is anchored to global commodity price index and global trade volume. The growth of SGDC supply is in line with nominal global trade volume, with no inflation or deflation. In base period, we can select a basket of global trading commodities with different weights, assuming that a certain amount of SGDC, for example, 1,000 units, can buy a basket of globally traded commodities of a certain amount, according to which the index of this basket registers as 100 for any sovereign currency. If it takes X units of this currency to purchase the same basket of commodities, then the exchange rate of that sovereign currency to SGDC can be drawn by X divided by 1,000. After the base period, the SGDC is anchored to the original basket of global trading commodity index in accordance with the Fisher equation. while the exchange rate of all sovereign currency to SGDC are free to float. These are some of my personal thoughts on SGDC. I hope that the idea can serve as a useful reference for the reform of the international monetary system in the future. Thank you for your time.
Thank you very much for your opening remarks. I mean, you definitely raise a very big topic, which is how central banks' digital currency will eventually impact the structure of the global financial system. So definitely, I'm very grateful for that, because of course this is a topic that I know it's in the mind of many observers of CBDC. So thank you very much, Dr. Yuan. I will now invite Ousmène, that I'm sure will also have a view on this topic, to share his screen and provide us with his opening remarks. And then we will go in a Q&A. I'm receiving a lot of questions, so I really encourage Ousmène also to stay within the time so that we can have a debate. Thank you.
Hello, Max. Sorry about this. Can you see my screen?
No, we cannot, but we can hear you.
Okay.
Sorry, we cannot see you and we cannot see the screen. At least now we can see you,
Very
but
good.
not the screen
Apologies,
yet.
sorry. Okay. So look, I would like to.
Now we can see it. Now we can
you
see
can.
The screen, not you,
Very
but the
good.
screen. I guess the slides are the most important.
Okay.
Thank you.
All right. Sorry, but you can hear. Okay, very good. Look, I wanted to also speak about CBDC and international payments, and I will be short. I think the key idea is when I refer to CBDC, I mean token-based CBDC. So CBDC issued on a blockchain or DLT distributed technology platform. The innovation in CBDC is adopting a new format of money, and that allows new functionality and utility that conventional formats of money, banknotes and reserves cannot possibly meet. But in order for CBDC to play a useful role, there are certain conditions that would have to be met. One is on access policy. So who can actually hold a CBDC? It is quite possible that access policy would have to change in order to allow CBDC, which is of course central bank money, to be used, and hopefully for the first time, in international transactions. So today settlement cannot take place in central bank money, meaning that the safety that is normally attributed to central bank money is not available for international transactions. So if this were to be the case, then obviously we would probably create a much more of a level playing field between the conditions that prevail in domestic transactions compared with those of international transactions. So that is certainly something that CBDC can aim for. The ECB has already earlier announced or hinted at that a future digital euro may be held by non-residents, and this is something that could fundamentally transform the way international payments are being conducted. Now, on liquidity accommodation, central banks normally conduct monetary policy to support domestic conditions only, and they are conducting policy only through domestic entities. But if in the future, non-resident entities were also able to participate, meaning that a central bank could directly respond to liquidity demands from non-residents, then this would also could fundamentally change the way monetary policy is conducted, but in particular how non-resident entities may have access to the central bank currency, and thereby possibly be more confident using it in international transactions. That in itself could be a key factor to sort of ensure that new currencies may play a more prominent role in international transactions. And then there's the jurisdictional and regulatory boundaries. Clearly, in today's world, the national territory is normally the boundary for the jurisdictional and regulatory reach of the central bank. But if a CBDC were to be used offshore, then new questions would have to be asked. Is it the home regulation, or is it also the host country regulation that would prevail? So as in today's world, money never moves, in a future world where CBDC is tokenized, it would move like goods, and therefore, new questions, in particular about extra-jurisdictional reach of the central bank would have to be asked. Now, there are different ways of interacting, of setting up networks, and I'm closely involved in a central bank project, in a CBDC project with the Central Bank of France, where we are testing cross-border and offshore payments in CBDC. There are alternative approaches. The one, for example, the Infinite Line Work, which has recently been extended by the BIS Innovation Hub, that uses a different approach. I think there are at least three possible approaches. One is a multiple network, meaning every central bank has its own CBDC network, and in order to conduct international transactions, there would have to be some interoperability between the domestic and the foreign network. The difficulty is, ensuring that this interoperability, can still take advantage of what are the DLT-based transactions, in particular for doing what DLT is best at doing, namely conducting bidirectional trades, payments versus payments, PVP, or delivery versus payments, DDP transactions. So a mechanism would have to be found, and it exists today, by which across networks sufficient interoperability can take place to allow PVP and DDP transactions to occur. Then there is the possibility of a foreign network. So central banks may deploy their currency on an existing foreign network. Now, they would do that if they have sufficient comfort that deploying their currency on a foreign network would give them sufficient control so that their prudential standards can be met at all times. This can also be done. And it is something which would benefit from using a single network for conducting PVP and DVP transactions, and yet give additional or sufficient control to the home central bank in this host environment, that it is confident that non-resident entities would be able to use the CBDC. And then there is the approach of the settlement corridor, where the idea is you create basically a third jurisdiction where all participants in that corridor would be able to access the CBDC of all the central banks participating in that corridor. This has the advantage of a single corridor, but it would, of course, create frictions with regard to the domestic networks. This is an approach that is being tried in Asia. It has certain advantages. It has, obviously, the disadvantage of the frictions with the domestic network, and then the high coordination costs, of course, of making a corridor work. So to conclude, I think CBDC promises to improve significantly international payments, and that in large part rests in the native properties that token can provide, doing new transactions, increasing competition between domestic and international exchanges, and offering greater choice by payment rails. I think it will work if CBDC can be held by foreigners, and that will in large part, of course, depend on whether central banks are confident enough that foreigners using their currency is still consistent with their domestic monetary and financial stability objectives. Now, I think the conditions that DLT provides is for currencies to become international, truly international, for the first time. And it may be, in particular, if external liquidity will be accommodated directly by a central bank, that currencies would become international in the true sense, meaning for the first time, possibly, since the demonetization of gold. I leave it here, and I'm happy to obviously answer questions. Thank you.
Thank you. Thank you very much, Ousmène. I mean, I guess the link between the cross-border use of the digital or central banks' digital currency and the topic also raised by Dr. Yao Quan before are linked, of course. So let me immediately touch upon that, because I have a question which I received just now. And of course, referring to the presentation of Dr. Yao Quan and to the concept of SGTC, I was wondering, as the IMF is preparing to issue new STR, as you know, there is a decision which I think is going to be taken in these days. The question which I received from one of the participants is, should eventually the IMF consider the issuance of a digital SDR, which I believe are not very far away from what, or at least similar in concept to what Dr. Yao Quan has mentioned. Maybe we start with Dr. Yao Quan on that, and then anybody else who wants to jump, please. Dr. Yao Quan, can you hear us? Would you like to comment on that? Because I think it relates to your proposal. I don't think he can hear us. Okay, who wants to jump on this?
Max, let me take a stab at this. Look, I think indeed the decision to issue about 650 billion SDR may be taken. There are fundamental issues regarding the utility of SDRs, but that is one thing. Will a digital SDR be useful? It will only be useful if access policy to the SDR will change, meaning that the SDR can only be used. It can also be used by private entities. If it's just as it is today within the IMF, then I don't think that making it digital would make any change because the transactions are electronic only anyways. But if it is to improve access and give access to a broader group of prescribed holders, including hopefully banks as well, then it could make sense to put it on a DLT to make it more accessible. Yeah.
Thank you, Ousmène. Let's see if Dr. Yao, do you have any comment on that? Or I see that you unmuted yourself, so I was wondering if you have any comment.
I think the digitalize of SDR is necessary, a good idea.
Thank you. Thank you very much. Let me move to another question, which I received actually before the panel, but I believe has been touched already in some of the opening remarks, which concerned the relationship between SDBC and Bitcoin or cryptocurrency in general, if you want. So, because of course the question is, could well be in the future that central banks' digital currency and Bitcoin or other cryptocurrency, which could emerge in the future, so private sector type of decentralized digital currency could coexist. I don't know if anyone wants to comment on that, because I think it is a very interesting question indeed.
Well, I can try to.
Please, Binur, thank you.
Yeah, I mean, my belief is that it would be very specific to regulation, because the potential implications of just existence of CBDC is quite dark area. But coexisting of private money, such as Bitcoin or any other cryptocurrency, and central bank issued digital currency, so it would be kind of hard to predict the potential implications of coexistence of these two forms of money, especially in terms of consumer preference on that. Well, our belief and our hope is to bring every possible advantage from existing forms of digital currencies to CBDC, at least in Kazakhstan, so that consumers can get this technical and tactical advantage of using digital currencies, but also it would be backed up by central bank reserves, hopefully. So at least in Kazakhstan, our belief is that those two things would eventually converge in one means of payment.
Thank you. Any additional comment on this topic? Any views?
Yeah,
please. Serey, please.
Yes. I think the reason why Bitcoin started it, which is around, after the global financial crisis, and that's about trust. When you don't trust the government, and Dr. Yao has also mentioned about, having currency pegged to a certain sovereign who can make it move up and down depending on their local context. That's when you're trying to find, alternative asset as a mean of saving. But I think eventually Bitcoin will exist probably as an asset class, but not directly competing with, say, a CBDC, because if you want to do transaction with Bitcoin, it can take you ages for it to happen. It's peer-to-peer, but it's not instantaneous. So it takes a few minutes or hours for a certain transaction to happen. That's the disadvantages of Bitcoins. The other thing is, when you talk about money, it's the unit of account, right? And with Bitcoins, within an hour, you can see the value move to by 3-4 fold of the base value, and that's something that is very difficult for people to use it to settle. But having said that, I think that the issue of trust, which we have been observing around the world, the deficit of trust in the governments, in banks, in central banks, would definitely, we would definitely see emerging other form of cryptocurrency, stable coins, or whatever that is, as an alternative to the central bank money.
Thank you. So I guess this is when you see cryptocurrency also as an alternative to gold, as a store of value in case, for instance, of hyperinflation, or let's say, as you said, less trust on the ability of central banks to maintain the value of the currency, of the fiat currency. Let me move to another topic. I have to ask, because as a banker, I always have to ask that question, but about the disintermediation of the banking sector. And maybe I want to start for you, Serey, just because from the way that you describe your project, my understanding is that commercial banks in Cambodia have been very much involved into the distribution of the digital currency, and you don't deal directly with retail clients. It goes through the commercial banks. So I was wondering, maybe given that you are really advanced in that project, how was the perception of commercial banks in Cambodia? They were afraid of being disintermediated? Did you have to assure them that they would play a big role, and it's just a change in the way things are done, but their role would remain unchanged? I think that would be great if you can share, and then maybe other panelists can comment on that.
So the way we do this is that we don't issue it directly to the end users, and banks would still be able to be part of this process. So if you consider the central bank issuing banknote, we don't usually, issue it directly to users. We issue it to financial institutions. So they still play a role of intermediaries on this. But to put it in simple form, if you are a customer and you hold back-on wallet, under a normal CBDC scenario, whenever there's a change of ownership, the central bank would have to record every single transactions, because the central bank is basically holding your account, right? Also, the central bank will be able to have all the information about you, who you make payment to, what's on, etc. And if, let's say, there is a sort of so if I don't trust commercial banks, what I do is I would just hold all my saving in a CBDC form, which is held with the central bank. So that's a normal scenario. The scenario that we're using is that the central bank would not hold the money of the individual. Commercial bank does. And also when there is a change of value between a change of ownership, the commercial bank are the one recording it. The central bank doesn't. So we don't know what is happening. So if the customer of one bank is transacting within their own sort of bank, same bank customer, the central bank won't be able to know that, because our liability to the commercial bank would still, particular commercial bank would still be the same. We would only see if a customer of bank A sent to a customer of bank B, in which case our liability to bank A would be decreased by the same amount, and our liability to bank B will increase by the amount that has been transferred. So only when there is transaction between banks, the central bank would know. When it's between the end users, we wouldn't. And if the commercial bank go into bankruptcy, for instance, and there is sort of provisional administration, you need to do an administrations on the banks. Even though you hold your money in the wallet, which by a normal central bank digital currency, you can actually go and cash it out from the central bank, because that's what the central bank owe you. In our scenario, we design it, and this is where, there's a difference between the technology design and the regulatory design. We design it in such a way that if your bank goes bankrupt, then your wallet will cease to exist. And money would go with. So that's how we have actually designed it to make sure that banks still play a role. Thank you.
Ousmène, if I can turn to you, because you raised the point of the cross-border issue. Of course, also commercial banks play a very important role in managing cross-border payments. Actually, they are normally the intermediaries, apart, of course, from the relationship direct between central banks. So eventually, if central banks allow for the use of CBDC cross-border, commercial banks will play a much smaller role as far as the flow of payments cross-border is concerned, which is a big chunk of business for a commercial bank, as we know.
Well, it depends, you see. I mean, I think there are certain transactions where central bank money could play an increasing role. And this is in foreign exchange and in securities trading in a cross-border setting. However, clearly, CBDC is not about replacing all commercial bank transactions. I think that would be, a big mistake. So the way you design CBDC will obviously be key, so that there is not you could call it an undue increase in the propensity to hold central bank money. But I think, CBDC in an international setting is a lot about extending the advantages of settling in central bank money. If we can settle in central bank money, in particular, on a DLT platform in an instant and atomic fashion, we can completely eliminate, transaction risks from international transaction, and that would be a huge benefit. And that would have huge welfare gains of all those that depend on international transactions. So I think that it should be a prudent approach where there is a role and there are key advantages. There maybe central bank money should play a greater role, but it should certainly not lead to a situation where suddenly it replaces all bank transactions. Banks, however, also need to take a more proactive role, and they need to think about to what extent can they themselves issue token-based, you could call it token-based deposits, basically, or negotiable deposits that have a payment function in order to conduct payments, taking advantage of DLT platforms in an international setting. This is starting now, but I think banks would need to become much more proactive to take advantage of what this new technology can do, in particular for international payments.
Thank you. I have a question which I think it's also interesting about risk, in particular operational risk. And I have to turn to Serey for that, because I have the feeling that you are the one who already dealt with this topic. Of course, we are talking about storage of data in the cloud, operational risk. In part, you already addressed that topic about the wallet. But I was wondering, I'm sure this was a big agenda item in your pilot and then in execution. Maybe you just want to comment on that?
Yeah, in terms of our exposure to technology risk, we are connected to banks. So there's a special channel through a VPN connection with banks only. When bank provides services to their customer, they have to secure that channel themselves. So it was offered by the central banks, but we don't take the risk and for everyone. We take the risk with our member banks. And so that's in a way sort of reduce our exposure. And it's DLT, it's blockchain in terms of, how likely somebody hacked into it. So far, it is known as one of the, I mean, who knows down the road what it could happen. And I used to say, Titanic sank on its first sail. It doesn't mean that, blockchain is unhackable and it's 100% secured. But we're trying to minimize the risk as much as we can.
Thank you. Ousmène, I'm sure Accenture is very much involved into this topic. I'm sure it's been raised by all the central banks that we've been talking to. What's your view on that?
Look, I think it's a fair point. It is, DLT is a new technology, and I can see, there is some hesitance. Is it mature enough in order to perform the sort of and have the scalability that is required for, in particular, a retail deployment? I think it can mostly meet it, most comfortably when it comes to wholesale, but in retail, there may still be some issues. But on the other hand, I think it's also fair to say that there are inherent advantages in what is a decentralized structure. This is a structure that should be more resilient to external shocks. It should be much more difficult to hack than anything that we have today. So clearly, it needs to be weighed. There are pros and cons in sort of scaling the legacy network and building the new networks. I think something we are very focused on. There will have to be integration between the two. Of course, there should be a seamless transaction between DLT and legacy platforms. Otherwise, it'll be a huge obstacle probably to adoption. But I think that on the security, I would argue it's fair to say that DLT should be far safer than the existing, financial market infrastructure we have today.
Very interesting, and I think we are more or less on time. So we have probably room for a final question. I think I believe that there are, as we mentioned, there are several countries which are working on CDBC, and I have the feeling that some of the smaller countries are already quite advanced. I mean, we heard from Cambodia where they are already executing on it. We know that in Europe, some countries are ready to go. For instance, Sweden is very well known that there's been a lot of advance in the planning. But ultimately, I believe that the real impact of a CDBC will be seen when one of the large economies, where basically one of the reserve currency issuers, if you want, of the countries which are represented today in the STR basket will issue a CDBC. So my final question to all the panelists would be, by when do you think that one of the largest central banks will issue a CDBC? And maybe I start from Binur in Kazakhstan.
Well, again, this is it's very important to define what is the start of the project of issuing CBDC, right? Because, the closest big country probably is China, which is already doing, as far as we know, the pilot project in some of its provinces, and very involved in cross-border experiments with mBridge projects. But again, my bet is China, obviously. It will be probably the first country, but again, the full implementation of CBDC doesn't mean just the issuance, of it, because it is very important to build the ecosystem around the infrastructure of CBDC, invite people to see the level of adoption. So I think that the closest real term of issuing and building all the things around the topic is at least 2 or 3 years. So that's my bet.
Thank you. Serey, I turn to you. I mean, first of all, congratulations to Cambodia. You're already well advanced from what we heard. But if you are, in terms of the largest issuance of reserve currency, what is your forecast in terms of timing?
I think China, and Dr. Yao is smiling, China probably this year. I think they could go very fast. Look at how fast they're moving from cash to the QR code, Alipay and WeChat Pay within a very short period of time. So it's not a matter of adoptions or explaining to the people. It's a matter of policies. I don't think technology is a problem. It's a matter of policy. If China say we'll do it tomorrow, it can happen tomorrow. Whereas in the rest of us, we have to have so many consideration, how to explain to the people how it's going to affect this and that. I think will be within this year, end of the year probably. I'm very optimistic.
Oh, wow. Thank you very much. I leave then Dr. Yao for the last, to give us the last word. But Ousmène, what's your forecast about the timing of a major economy issuing a central bank digital currency?
Well, look, I think it depends whether you talk about retail CBDC or wholesale CBDC. Sure. In wholesale CBDC, I can see adoption far faster because central banks today, they accommodate different payment platforms, be it RTGS or ACH or other and there is no reason why they shouldn't also for very specific trading venues or so start deploying CBDC for wholesale transactions, which is a much more confined and controlled environment very soon. And I think we will see the earliest adoption probably in Europe, actually. Probably, maybe, well, I shouldn't say by which country, but it can come fast. Retail is more complicated. And also the use case for retail CBDC is a mixed one. And hence I can see why there will be some hesitance, you see. CBDC is not likely to change user experience very much. I mean, whether you pay with your debit card or whether you pay with CBDC, sadly, no one cares whether you pay in central bank money or in bank money. So this will be a barrier, I think, to making CBDC a popular, anytime soon. I mean, particularly in countries where there are huge, or many digital payment alternatives. You see, it may be different in developing countries, maybe where CBDC, although this is also controversial, can play a role in financial inclusion. That may be a special case, but. So all being said, well, when it comes to the 5 in the SDR basket, yes, I believe China is first. But I think Europe is a leading region, and we know Japan, obviously, the Bank of England, now the Fed as well. They're all, and the ECB, of course, all thinking about it. So maybe they move in parallel. But yes, I would probably believe China is first. But for China, I think the interesting bit really is the international use. Domestically, I don't think it's going to make much of a difference, but it's the international use where it's getting exciting.
Thank you, Ousmène. Dr. Yao, everybody is betting on China to be the first country to issue a CBDC. So now you have to tell us now. But what is your forecast? I don't expect you to tell us, of course, where China stands. I understand the sensitivity of the issue, but among the largest economy, by when do you expect a large economy like China, or like Europe or the US to issue a CBDC?
Thank you. For a long time, central banks of developed countries tend to be more prudent and conservative towards CBDC compared with those of emerging markets and developing countries. But in 2020, mainstream central banks such as those of EU, the United States,
I cannot hear you very well. Sorry.
And Japan.
We cannot hear you very well. If you can speak closer to the microphone, thank you.
For a long time, central banks of developed countries tend to be more prudent and conservative towards CBDC compared with those of emerging markets and developing countries. But in 2020, mainstream central banks such as those of the EU, the United States, and Japan have changed their attitude. On March of 2020, the US government proposed a $2.2 trillion stimulus package. It is stated in the draft plan that the American households will get subsidy directly from digital dollar wallets. The draft also gave a detailed design scheme for digital dollar. Although the design was removed from the final version of the plan, it was still impressive. In October of 2020, the ECB published a report on digital euro and said the digital euro will be released when necessary. The Bank of Japan also issued a report on digital yuan and proposed a Chea plan. It is expected that the involvement of mainstream central banks will for sure accelerate CBDC research and development around the world. According to a survey by BIS, in the next 3 years, central banks that issue CBDC will likely cover 1/5 of the world population. I believe that the era of CBDC will come soon. Thank you.
Oh, apology, I was on mute. I had to make a mistake. I was on mute in the last minute of the panel. Thank you very much, Dr. Yao. I would like also to thank you, of course, Serey Chea from the Bank of Cambodia, Ousmène Mandeng from Accenture, and Binur Zhalenov from the Central Bank of Kazakhstan. I think it was a pleasure to debate on this. I think we learned quite a lot of things today. First of all, there are countries like Cambodia, which are very much already ahead in the launch of CBDC. We also heard that the expectations are very high on the largest economies to issue a digital currency. We heard about how digital currency could change the fundamental nature of the global financial system, and in particular, of course, of the reserve composition of the global reserve managed by central banks. And I think also we heard that, I'm very glad to hear that the commercial banks like UBS will still be playing a role in such a digital world. I just can confirm that because with our colleagues from the technological department of UBS, we are very much involved in the project mentioned by Ousmène concerning the wholesale digital currency project. So I'm very proud that we are leading in that field as well. With that, I would like to conclude the panel and also conclude our UBS IMF World Bank macroeconomic series done jointly with Mark Uzzan and the Reinventing Bretton Woods Committee. Thank you very much to all for your participation, and I look forward to see you in future virtual events still for a while organized by UBS. Thank you very much and bye-bye. Thank you.
Thank you.
Thank you very much. Bye.
Bye-bye.